Hey everyone, welcome back to The Explainer. So today we are diving into an absolute market anomaly. The KSP just posted its biggest historic gain, rising a totally unbelievable 17.91% in a single day. Semiconductor buying basically took over, and then it just cascaded everywhere. Let's get right into how this actually happened. The Korean index just completely shattered all existing records. To put this into perspective, this massive 17.91% surge absolutely dwarfs the previous record gain of 11.95%, which was set way back in October of 2008. And this wasn't some gradual, slow burn rally. It was an explosive reversal, really driven by a true perfect storm of macro and micro market forces, all aligning at exactly the same time. So we're unraveling the mechanics of this upward perfect storm to see exactly what triggered it. Let's step back for just a second for some really crucial context. Just days prior to the surge, deep fears of slowing AI demand triggered 2 consecutive days of historical circuit breakers on July 28th and 29th. Markets were seeing Alphabet spending more on AI than they were bringing in, and Intel was bleeding cash. That sparked massive panic across the board. Everyone was asking, is this expensive AI infrastructure actually going to pay off? Well, the first catalyst to flip that narrative came from the US. Economic data came in a bit cooler than expected. We had June core PCE and second quarter GDP lowering inflation pressure, which of course means lower interest rates. And as we know, that's the ultimate green light for tech stocks. You combine that with Microsoft proving their AI investments are actively making money, and the macro narrative just flipped instantly. Plus, oil prices dropped, which lowered long-term rate pressures even further. Then, Samsung Electronics stepped in and altered the entire outlook. Their earnings announcement completely erased all those lingering market concerns over expanding Chinese DRAM supply and weak pricing power. Before this dropped, there was a real fear that competitors expanding their production would just crush margins. But Samsung effectively shut that whole narrative down. They projected rising server demand and severe memory shortages stretching all the way through 2028. And that perfectly illustrates the high bandwidth memory, or HBM supercycle. These are the physical chips that power AI. Confirmed demand from both Samsung and SK Hynix proved this AI spending boom definitely isn't a fad. It's highly durable. Demand for processors and equipment is actively accelerating. The market instantly realized that the pricing power and operating profits for existing memory makers are actually expanding right now, not contracting. This macro shift unleashed an absolute tidal wave of capital. Foreign investors didn't even blink. They injected a net 7.28 trillion Korean won strictly into KOSP cash equities, starting exactly at the 9 a.m. open and literally never letting up through the entire trading session. And look at the sheer concentration of this capital. Over 56% of this massive foreign buying targeted just 2 semiconductor giants. 1.48 trillion won flowed into Samsung Electronics, and a staggering 2.61 trillion won poured directly into SK Hynix. It was incredibly laser-focused. In fact, the buying was so intense, it actually broke the market's safety valves. It triggered a historic buy-side sidecar at exactly 9:06 a.m. If you're not familiar, think of a sidecar like a circuit breaker in your house. It temporarily halts automated program buying for 5 minutes just to stop futures volatility from completely destabilizing the cash market. But honestly, the momentum just couldn't be stopped. Driven by that massive automated program buying, the semiconductor rally rapidly cascaded. It ended up lifting 775 listed stocks into a total sea of green. SK Hynix actually hit its 30% daily price limit for the very first time since it was listed. Samsung closed up over 26%. It was wild. Now, to understand the true violence of this 17.91% surge, let's look at 3 hidden market mechanics that really supercharged this breakout. Mechanic number 1 was a highly calculated 3-day capital rotation by foreign investors. Notice how on July 29th, they exited their direct exposure. On the 30th, they started entering all exposures. And then on the 31st, they executed a massive direct expansion. Basically, during the panic on the 29th, foreign capital parked itself safely in indirect exposure assets, things like Samsung Preferred and SK Square. They kept their economic exposure, but cleverly avoided all that common stock volatility. Then, the very second positive earnings dropped, they flooded right back into direct common stock, multiplying their volume in Samsung Electronics by 10. They didn't actually leave the market, they just hit. Okay, Mechanic 2 was purely algorithmic. It was this massive leveraged ETF snowball effect. As the KOSPI index spiked in the morning, leveraged ETFs naturally grew in value. That means their target exposure automatically grew too. So to strictly match this, fund managers were mechanically forced to buy more underlying stock. That forced buying pushed the price even higher, which just created this unstoppable feedback loop. And the absolute proof of this is in this one number, 91.67%. In the Korean market, institutional investment trusts handle these ETF management traits. On this specific day, over 91% of total investment trust net buying was forced directly into Samsung and SK Hynix just to meet those algorithmic targets. They completely drained the sell orders and rocketed the prices. Which brings us to Mechanic 3. This one reveals the slightly darker side of this rally, retail capitulation. While foreign capital and institutional algorithms were buying in historic, massive sizes, individual retail investors were actively selling into the rally, heavily concentrated in the market's highest liquidity stocks. So, why on earth did retail sell into a record rally? Well, retail investors were facing a massive 32.9 trillion won debt overhang from the prior day's panic. Because a lot of their accounts were underwater, brokerages automatically force-sold their most liquid assets, which happened to be Samsung and SK Hynix, just to cover those collateral shortfalls. Retail was literally forced to sell right at the exact moment institutions were forced to buy. So the anatomy of this 17.91% record gain is pretty clear. It was the volatile, explosive collision of fading macro fears, aggressive algorithmic rebalancing, and forced retail liquidations. The market didn't just rally on good vibes. It was structurally forced upward by these compounding mechanics. We've seen exactly how this perfect storm formed, but with foreign capital now heavily repositioned and institutional algorithms completely reset, a massive question remains for us going forward. Will this semiconductor-led momentum permanently redefine global exposure to Korean markets? It's something we'll be watching very closely. Thanks for tuning into The Explainer, and we'll catch you next time.